All right, let's get right into it here. Market is pretty much flat on the S&P, as you can see, but the biggest problem is what the buyers are going to do with this bearish divergence, weighing this thing down. As you can see here, while the odds are the price has been moving sideways here the last couple of days, as you can see here, and that oscillator continues to travel to the downside, weighing this thing down here. So that oscillator is still favoring the sellers, especially with that lower high on that oscillator, while that price is printed that higher high. There are two attempts from the buyers here. We see a gap up, faded, gap up and faded. Last week there was a gap up, fade. So we're seeing the bulls trying to keep this momentum going. They just don't have the gas to keep that up gap sustained. And obviously we know that. Why? Because look at that oscillator. Oscillator is already, it's basically telling us it's tired. We got a bearish divergence. It's pushed to the max right now. Bulls need to reset that oscillator. Only question is, while the bulls trying to rest here, trying to reset that oscillator, are we going to see that price consolidating? That's what we call correcting through time. Perfect. Where it moves sideways in a range, wait it out until the oscillator reset. It doesn't even need to reset all the way. It can even reset in the middle of it and then crosses back up, and then bulls can have time to rest, reset that oscillator, and then push it to the all-time high level.
One rule of Wall Street: nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles.
Or is that bearish divergence presence too much? Are the bears keep pushing it down? Sooner or later, bulls are not going to hold that micro term, which has been acting as support here and here. If we lose that micro term, especially with a down gap, if we see a down gap tomorrow, very quickly that 518 is gonna get retested. You can see 518 is a prior swing high here, prior resistance, acting as new support, coinciding with that rising pivot. That rising pivot, as you can see, definitely do carry some weight, because that level, that dotted pink rising line right there, coinciding with that prior resistance there, 518 is gonna be that micro term support. If we do lose that micro term moving average, if we also lose 518, I have my short term coming up here at 515. Ultimately though, what bears are looking to do is looking to attack this up gap at 514 and 511 or so. For that to happen, bears really need to gap it down and flush it down, because we have so many supported areas that the bulls are working with. If bears cannot push it as quickly as possible, if you allow bulls to kind of hang around here, sooner or later they're gonna get that oscillator curl back up, and bulls, because we're still in an overall uptrend here, bulls can still bring it. All bulls need is just a little bit of rest. It's a little bit heavier right now because of that bearish divergence, right? And so that's why I think there has been this up gaps in the morning at open and getting faded, because bulls are trying, but that bearish divergence is weighing heavy for the buyers. So it's very simple at this point. If bulls can keep that micro term and hold above it, and maybe just keep trying and keep staying sideways, while that oscillator can maybe a reset to the upside, and there's a good chance buyers can finally find some traction, continue to the upside. If that micro term gets lost, we're gonna see 518, even possibly 514, until that oscillator gets all the way to the bottom of his band.